Hello and welcome to the Her Retirement Podcast. I am your host, Lynn. And here in my podcast each week, I talk about how to live a better, more intentional, and financially secure life now and in retirement. Whether you're single, suddenly single, or a partnered up woman, your only sure investment is an investment in yourself. And financial wellness, also known as financial security, isn't just a dream, it's a decision. And when you decide to make a commitment to yourself and change your financial destiny, our fresh, modern platform will help you know more and have more now and in retirement. Welcome to Her Retirement. Welcome to my Know More, Have More financial wellness platform. And welcome to my podcast. Are you ready to get her done? Let's do this. Hello there, and welcome to this week's episode of the Her Retirement Podcast. Happy April, happy spring. And guess what? April is also Financial Literacy Month. So, of course, I'm excited about that because Her Retirement is all about improving financial literacy and helping women know more and have more on a variety of topics. And this week, I am talking about Roth IRAs. I was inspired because I wrote out a check to contribute monies to my Roth IRA before tax filing deadline. So you can still do that for 2021. The max that you can contribute is $6,000. But if you're over 50, you can contribute up to $7,000. So the clock is ticking, but there's still time. Very important part of your tax planning strategy to try and max out your Roth IRA contributions each year. Very, very important part of your overall tax planning strategy. But today I'm going to focus in on educating you on the 4 steps to converting Roth IRAs. Determining when or if you should convert your investments to a Roth IRA is a very individual decision, and it's based on factors such as your financial situation, your age, tax bracket, current investments, and your alternate sources of retirement income. But I want to ask you a few questions to see if you're confident in the answers to these questions. And of course, if you feel like you are, I would go ahead and still listen to this podcast just to make sure that you've got all your I's dotted and T's crossed. And of course, if you're really confused about Roths versus traditional, definitely sit back or throw on some headphones, go for a walk, get outside and enjoy some of that gorgeous spring weather and take a listen, get educated about Roth IRAs. So first, what is a Roth IRA? We'll talk about that. Number 2, what is the difference between a traditional IRA and a Roth IRA? 3, what accounts are eligible to be converted to a Roth IRA? Number 4, how can a Roth IRA conversion help protect you from future income tax rate increases? And number 5, what are the tax consequences of a Roth IRA conversion? And finally, 6, how can a Roth IRA conversion help provide a greater financial legacy for your beneficiaries? So let's start with what a Roth IRA is. It is an individual retirement account from which you can withdraw your earnings completely tax-free anytime after you reach the age of 59 and a half, provided that your account has been open at least 5 years. So even if you can't contribute the max amount to a Roth, it's very, very important to at least open one as soon as you can to start that 5-year clock ticking. So I think I opened mine at 55, so that at 59 and a half, 60, actually, it will be 60, I'll be able to withdraw monies from that account. So I would encourage anyone that's over 55 to get that Roth IRA opened ASAP. If you're younger, you probably have some time. Again, depending upon when you think you're going to retire or when you think you might need the monies that you're contributing to that Roth IRA. Next is, what's the difference between a traditional IRA and a Roth IRA? Well, traditional IRA contributions are tax deductible when certain requirements are met. With a Roth, however, contributions are not tax deductible, but earnings are withdrawn income tax free. Again, if you're 59 and a half years old and you've had the Roth account at least 5 years. You also don't have to take RMDs, required minimum distributions, starting at 72, as you do with a traditional IRA. It's important to note that distributions from Roth IRAs cannot be used to fulfill the RMD from a traditional IRA. So now let's talk about the 4 steps to help you understand Roth IRA conversion opportunities. So first, you need to understand the basics. What accounts are eligible to convert to a Roth IRA? So because income limits were removed as of January 1st, 2010, anyone is eligible to convert to a Roth IRA. You might consider using this opportunity to convert one or more of your qualified retirement savings accounts to a Roth IRA for its tax benefits at retirement. So convertible accounts that can be converted from and to a Roth IRA include but are not limited to traditional IRAs, old 401k plans, SEP IRAs, old 403b plans, and old 457 plans. Okay. Next, how can a Roth conversion help protect you from future income tax rate increases? Well, guess what? We all understand the future is not always certain, especially when it comes to income taxes. However, a Roth IRA can be used as a Roth IRA can be used as an option to protect against future tax rate increases because the account grows tax-free and the qualified distributions from the account are also tax-free. This means you will have tax-free growth of your hard-earned money and tax-free income at retirement. So this is why you need to have this tax-free bucket, okay? You're going to have a few different tax buckets in your retirement tax strategy. This is an important one to take advantage of, okay? Very, very important. And guess what? A lot of people believe that taxes are going to go up in the future because we have such a huge deficit. People believe that tax rates are going to have to go up to pay for that deficit. So again, if you are in that camp, very, very important that you look at some tax-free programs, tax-free in retirement plans and programs, right? So that if tax rates are higher, you're going to be paying less taxes. That's what it's all about, being as efficient as possible with your money. Next question, what are the tax consequences, if any, of a Roth IRA conversion? Well, a conversion from that traditional IRA to a Roth IRA is taxable. The converted amount is treated as ordinary income, even if some or all of the growth in value of the traditional IRA was from an increase in the value of stocks or mutual funds. If all of your contributions to your traditional IRAs have been tax deductible, then the full amount of your conversion is taxable. Next, can I contribute current income to a Roth IRA? To qualify to contribute to a Roth IRA, your income must be less than the level set by Congress, okay? And you can go ahead and Google that because it's constantly changing. So it's important to take a look at that and make sure that you are within those guidelines. Next, can I convert my traditional IRA to a Roth IRA? Let's say in 2010, people with incomes of more than $100,000 became eligible to convert to a traditional IRA or any other convertible accounts into a Roth IRA regardless of their incomes. Those married and filing separately could also convert their investments into a Roth IRA. Next question, how can a Roth IRA conversion help provide a greater financial legacy for my beneficiaries? Well, a Roth IRA can be an effective estate planning tool. Pre-retirees and retirees who convert a traditional IRA into a Roth IRA can reduce or eliminate the income tax their beneficiaries would otherwise have to pay on withdrawals taken from the inherited traditional IRA. So, for instance, after you die, your beneficiaries won't owe any income tax on withdrawals from the inherited Roth IRA. However, in this case, the account now falls under the same minimum withdrawal rules as traditional IRAs. Nevertheless, if your beneficiaries don't need the Roth IRA money right away, they can spread out those withdrawals over their lifetime while continuing to earn tax-free income on the remaining account balance. Now, of course, you'll have to pay tax on any accumulated earnings and tax-deductible contributions when you make the Roth conversion. But this might not be a bad thing as long as you can pay the tax out of non-IRA assets. So when you pay the taxes due upon conversion, you effectively prepay income taxes for your beneficiaries without owing any gift tax or using up any of your valuable estate tax exemption, assuming you are susceptible to an estate tax. Plus, prepaying the income taxes reduces the size of your taxable estate. Next question, can I withdraw from a converted Roth IRA without penalty? Roth IRA conversion dollars may be withdrawn at any time without penalty as long as you're age 59 and a half or over and you've held the account for at least 5 years. There are other exceptions to distribution rules for penalty-free pre-59 and a half distributions, including disability, death, and in some cases, the purchase of a first home. So the question is to Roth or not to Roth. Is a Roth IRA right for you, or should you stick with a traditional IRA? I've heard that question many times. Roth IRA conversions aren't for everyone. It's important to thoroughly understand your specific situation before you make any decisions. There are several tax and estate planning considerations to be evaluated when deciding whether to convert to a Roth IRA. Okay. What I'm going to look at now are possible factors to consider. Okay. Understand your conversion options. Generally, now this is generally speaking, you shouldn't convert to a Roth IRA if you can't pay the tax on the conversion from a source outside of the IRA. Okay. By paying the conversion taxes with income from the investments, you not only reduce the amount of the conversion, thus resulting in less tax-free money, but you can also cause an early distribution penalty if you're not over 59 and a half. Next, a partial conversion may be an option for you. So in a partial conversion to a Roth IRA, that allows you to convert a portion of an existing IRA while avoiding the shift to a higher tax bracket during the conversion year. Okay? Now, when do you retire? Usually, the older you are, closer you are to retirement, the less sense it makes to convert a traditional IRA to a Roth. Now, this is because you'll have less time for the tax-free growth to make up for what you paid in taxes on the conversion. Okay? Next is, do you anticipate your tax bracket increasing or decreasing in the future? So if you expect to drop into a much lower income tax bracket after you retire, a conversion may not make sense. You will have to pay income tax on the conversion at your current high rate. Instead, let the money compound in your regular IRA and pay taxes at your lower tax rate in retirement. However, if your tax rate is only expected to drop after retirement, conversion may be the right move. Now, it's important to understand these are merely rules of thumb, okay? Very, very important. Rules of thumb. In most cases, these conversion options give the right results, but your particular situation really may call for a completely different option, and you really need to consult with a qualified retirement tax advisor to understand what's the best for your situation. And as a side note, I've found that some CPAs are good at this, but sometimes you really need to find a retirement advisor who's also got tax planning as a key part of his or her services, right? If they offer all the different retirement planning services, including tax planning, very, very important because investments, tax planning for retirement, they all go hand in glove. So it's very important to recognize the advantages of converting, and let's talk about that. The benefits of converting assets to a Roth IRA vary by individual, as I've said. A Roth conversion may not be beneficial to some, while it may benefit others greatly. All right, so let's look at some of these key benefits. Potential for greater net income and withdrawals. A Roth IRA offers you the potential for greater net income than a traditional IRA because the withdrawals, subject to requirements, are income tax-free on a Roth IRA. You receive more dollars in your pocket as opposed to a portion of your withdrawal being taxed as with a traditional IRA. So let's suppose you have a Roth IRA with a $100,000 balance. If you meet all the rules, you won't pay tax when you withdraw that $10,000 or any of the earnings it generates. So compare that to a traditional IRA with the same balance. When you withdraw that $10,000, you'll pay a percentage of that amount and its earnings to the IRS. No required minimum distributions, no RMDs, big benefit. This can permit you to accumulate much greater wealth in your later years. Rules for the traditional IRA require you to begin receiving RMDs when you turn 72. Even if you don't need those distributions, they still require an annual and taxable distribution. The government wants its money, so that's their way of forcing you to pay the tax on those savings. The RMD rules don't apply, however, to a Roth IRA until after the owner dies. So a Roth IRA owner who survives well past age 72 may leave a much greater amount of wealth to children or other beneficiaries as a result of this rule. For this reason, a Roth IRA conversion could potentially pay off quite handsomely. Next benefit, income tax-free inheritance for beneficiaries. If your beneficiaries receive a traditional IRA, they'll have to pay income tax on the amount withdrawn. The value of what you transfer to them is reduced by the amount of the taxes. Your beneficiaries get to keep 100% of the amounts they withdraw from a Roth IRA, which can be a significant financial advantage to them in the long run. In addition, the conversion to a Roth will reduce your taxable estate by the amount of income taxes you pay to convert, which may reduce estate taxes for your heirs. Finally, I always talk about this. It's great to get educated, to improve your financial literacy. It's really important to do planning, talk to someone, a tax strategist, because this is pretty complicated stuff. But really, really important is to take action. To better understand your retirement needs, it's important to work with a qualified financial or insurance professional that's very tax educated, understands tax strategies, someone you trust, someone who's going to listen to your needs and answer your questions, all of them. And they're going to have the patience to walk you through this because it can get complicated. There's a lot of different rules, a lot of factors, right? If this happens, this happens. If this happens, this happens. Very important to review that strategy. Your retirement well-being depends on making the right decisions today, which, we don't have a crystal ball. We just try to look into the future and make some best guesses. And we try to reduce our tax risk to the greatest extent possible and make our money more efficient by doing tax planning. It is possible. It has a huge impact for some people. You just want to create a more stable future for yourself and potentially leave your children or your heirs or anybody else you want to leave a legacy to, put them in a better situation financially too from what they inherit. So if you have any questions about Roth IRAs, traditional IRAs, tax strategy, our friends at Your Retirement Advisor can definitely sit down, go over this stuff with you, get on a Zoom call, help you figure out your tax strategy. It is a key component of a retirement plan. If you don't have a tax strategy, if the advisor you're working with has not brought up taxes, you need to find someone who can have these conversations with you, help you make the right decisions. So, as always, email me, lynnt@herretirement.com. Be happy to get you connected, happy to walk you through some of this, get you some more educational materials if you need some, and also help you get a tax analysis done. The people at Your Retirement Advisor can do that tax analysis to see if you can benefit from, one, a Roth IRA, depending upon your earnings, and two, Roth conversions. When is the best time to do those conversions? I know in my case, a large chunk of my retirement savings is still in a traditional IRA, and I need to do a tax planning strategy to figure out when will be the best time for me to slowly convert those traditional monies over to Roth. So that's something I'm going to be doing. I'll be walking the talk. So I got to figure that out myself. It's on my to-do list. So here's to getting her done. Thanks for listening, and we'll talk to you next week.